Have you ever wanted to just quickly get up to speed on something complex, like, say, a fast-changing market,
Yeah.
without totally drowning in data, to get the crucial insights, the surprising facts, and figure out what it all really means for you right now? Well, you're definitely in the right place today. We're doing a deep dive into the Mammoth Lakes real estate market, looking specifically at where things stand in July 2025. We've got a pretty comprehensive market update report here, and our mission really is simple. We want to cut through all the numbers
Yeah, there are a lot of them.
and pull out the essential nuggets of knowledge. Basically, arm you with a clear understanding of the current landscape. We want you to walk away knowing what this dynamic situation might mean for you, whether you're thinking about buying, selling, or maybe you're just a homeowner curious about your property's value.
And it really is a fascinating market right now. I mean, after a period of what felt like almost constant kind of dizzying trends, we're actually seeing some pretty profound shifts emerge.
Huh.
It's especially clear when you look at how inventory is impacting different segments. It creates a picture that's, well, it's far from uniform.
Okay. All right, let's dig into this shift then. We've been hearing a lot about changes in Mammoth Lakes. From your perspective, what's the absolute biggest story happening right now, especially thinking about inventory? Because, for years it felt like properties were just vanishing the moment they listed.
You've really hit on the core of it there. For nearly 3 years, we were in this period of historically low inventory. I mean, the shelves are almost bare. But the seismic shift we're seeing now, mid-2025, is this really noticeable jump in listings. We've seen both condo and single-family home inventory increase pretty significantly over the last couple of months.
Yeah.
And that's pushing us squarely into what many are now labeling a buyer's market in certain segments anyway.
A buyer's market in Mammoth.
That feels like such a dramatic turn from the frenzy we'd gotten used to. Can you give us some hard numbers? Like, how big are these inventory increases we're talking about?
Absolutely. So for condos, inventory jumped a striking 20% back in April,
20%, okay.
and then another 40% in June, just June alone.
Wow.
Yeah. So that brings the total up to 125 active condo listings as of July 1st. And with that kind of jump, we're looking at nearly 7 months of inventory for condos overall, which, undeniably moves it into buyer's market territory.
7 months, that's a big number.
It is. And single-family homes also saw a really meaningful surge. They were up 57% in May,
57.
and then another 27% in June. So that brings us to 28 active single-family listings. This pushed that single-family segment from what was a really strong seller's market into a much more balanced position. It's settled around 6 months of supply now.
Okay, so after years of properties basically flying off the shelves, now there's actual choice for buyers. That's a huge shift in leverage, isn't it?
It really is. How does this current inventory level compare to, say, pre-COVID times? Is this just a temporary blip, you think, or are we maybe settling back into some kind of historical norm?
Well, what's truly fascinating here is that this current inventory level isn't just up. It's actually landed pretty much precisely back at its 10-year average.
Really? The 10-year average?
Exactly. Which signals more than just a blip, I think. It suggests a powerful recalibration is happening. We seem to be witnessing a return to, let's say, market fundamentals after years of really unprecedented volatility. For buyers and sellers, this probably means a more predictable, maybe less frantic landscape. Moving away from that anomaly back towards a more historical equilibrium, it's kind of a sign of a maturing market finding its footing again.
That's a really helpful way to frame it, a return to equilibrium. Okay, but with all these new listings flooding in, what's happening with pricing? Usually more inventory means softer prices, right? Is Mammoth Lake somehow defying that trend, or are we seeing prices react as you might expect?
Well, that's the interesting part. Despite more listings pretty much across the board, overall pricing has actually remained quite stable. The median prices have actually risen for both property types compared to 2024 figures. Condos are averaging around $803,000 overall, and single-family homes have reached $1,362,500.
So wait, inventory's way up, but median prices are also up compared to last year.
Correct. So while inventory is higher, prices aren't collapsing. They've actually seen a modest increase year over year. It's definitely a nuanced picture.
Okay, now here's where it gets really interesting, I think. While the overall picture suggests this shift towards a buyer's market, the report specifically cautions that the market feels different depending on the price point. Can you peel back the layers on that? Explain these microclimates for us, because a general label like buyer's market clearly doesn't tell the whole story, does it?
It absolutely doesn't. And this is so crucial for anyone trying to really wrap their head around the Mammoth Lakes market right now. That buyer's market label.
Yeah.
Yeah, it's certainly true overall for condos, with that 7 months of inventory figure. But when you zoom in, it varies wildly. For instance, condos under $1 million, they're still seeing incredibly strong activity. Buyers are practically snapping those up.
Okay, so the lower end is still hot.
Right. But then you look at the mid-range, especially condos priced between, say, $1.5 million and $2 million. Those are definitely sitting longer.
Mm.
We're talking over 17 months of supply in that specific bracket.
17 months.
17 months, which is, a stark contrast.
Mm.
In real estate terms, that's practically an eternity.
Wow. So if you're a seller in that specific mid-range condo bracket, you're looking at a very, very different game than your neighbor maybe trying to sell $1 million condo.
Completely different.
What about the top end then? Luxury condos.
And that's the other extreme. In stark contrast to that struggling mid-range, luxury condos, those over $2 million, are actually experiencing high demand. There's only about 2 months of inventory there.
Only 2 months for the luxury end. It really highlights how segmented things are.
It absolutely does. And just to put the sales activity in context for condos overall, 112 have sold through June 2025. That averages out to about 18.6 per month. Compare that to 243 in all of 2024, which averaged around 20.25 per month. So, yeah, slightly slower on average in terms of the actual number of sales closing.
Got it. And how about how quickly they're moving? Days on market or DOM? Is that changing?
Well, condos technically sold faster on average in 2025, 68 days, compared to 72 in 2024.
Faster, even with more inventory.
Yes, and this is a really important caveat, new construction sales are skewing this number dramatically. New construction condos are taking a median of 345 days to sell.
Whoa, almost a year.
Right. While resales were moving much, much faster, at just 62 days median. This often happens because, new developments get listed really early, sometimes even before they break ground. So the clock starts ticking then. Even if the property isn't ready for months or years, if you're looking at a new build, just be prepared for potentially a longer timeline.
That's a fascinating detail, how new construction can really warp the average like that. Okay, let's shift gears to single-family homes. How does that segment break down by price point, given that overall 6 months of supply you mentioned?
Right, so for single-family homes, we're looking at about 6 months of supply overall, which is more balanced than the condo market. But again, sweet spots are pretty clear. Most of the activity, and definitely the strongest buyer interest, is concentrated in that $1 million to $1.5 million range. That segment has just 2.7 months of inventory.
Under 3 months, so still pretty competitive there.
Very. And we're also seeing strong activity for homes between $500,000 and $1 million. So, yeah, these price points are still moving relatively quickly.
Okay. And what about the higher end of single-family homes? Are they sitting longer, like those mid-range condos you talked about?
Precisely. Homes priced above $2 million are moving more slowly. We're seeing up to 12 months of supply in that higher tier. So yeah, if you're selling a higher-end single-family home, you're certainly facing a different dynamic than someone selling in that popular $1 million to $1.5 million bracket.
Makes sense. And the sales volume for single-family?
In terms of sales activity, 30 single-family homes sold through June 2025. That averages out to 5 per month, which is actually slightly up from the 4.8 per month average we saw in 2024.
Interesting. Slightly more sales per month. But how about days on market for single family? Are they moving faster or slower overall?
They're definitely taking longer to sell now. The median days on market through June 2025 was 115 days.
115 days.
Yeah, which is a pretty noticeable jump up from 73 days median in 2024. So while slightly more single-family homes might be selling each month compared to last year, they are definitely sitting on the market for a longer period before they go under contract. It really speaks to that shift in buyer leverage we talked about earlier.
Okay, so beyond just inventory and these different property types, what are some of the other maybe bigger factors at play here? Let's talk interest rates and overall pricing trends, because those are always front of mind for anyone involved in real estate.
Oh, absolutely. Critical factors.
Yeah.
So as of early July 2025, specifically July 6th, according to the report, the prevailing rate for a 30-year fixed conforming mortgage is hovering around 6.75%.
6 3/4 for conforming.
Right. And conforming loans, just to clarify, are those that meet the standards set by government-sponsored entities like Fannie Mae and Freddie Mac, generally for, lower loan amounts. For jumbo mortgages, which are for those larger loan amounts you often need for higher-priced homes in places like Mammoth, it's slightly higher, around 6.85%.
Okay, so just under 7%.
Exactly. And while rates are there now, the expectation mentioned in the report is for them to potentially settle closer to maybe 6.4% by the end of the year.
That slight dip could definitely make a difference for some buyers, couldn't it?
It could help on the margins.
But even at 6.75%, affordability is still a huge hurdle for many, especially in a pricier market like Mammoth Lakes. Are buyers finding, I don't know, creative ways to bridge that gap?
Affordability definitely remains a challenge, no question. However, the report does highlight that buyers are finding creative solutions to make deals work. We're seeing more instances of things like rate buydowns, for example.
Rate buydowns, how does that work?
Basically, a portion of the loan interest is paid upfront either by the seller or sometimes the buyer specifically to secure a lower interest rate for the buyer for the first few years of the loan.
Ah, okay.
And also things like seller credits, where the seller contributes funds towards the buyer's closing costs. These kinds of strategies are becoming really key factors in getting transactions over the finish line in this environment.
Gotcha. And regarding prices, we heard earlier that the median prices have actually risen compared to 2024 overall. But then the report also mentions that values are stabilizing or even declining slightly. That sounds like a bit of a contradiction, or at least a very nuanced distinction. Can you clarify that for us? What's really going on with values?
Yeah, this is a really critical distinction, and it's important for everyone to understand. It's definitely not a market crash we're talking about. It's more like a vital correction. Think about it. After years of really unsustainable, often double-digit appreciation, what we're likely witnessing now is simply the market finding a more normal level. Home values are normalizing.
Oh, stabilizing.
Exactly. Yes, the median price so far this year might be higher than the average for all of last year, but if you look on a maybe month-to-month or quarter-to-quarter basis, values might be leveling off or seeing very minor adjustments downwards in some segments. Think of it less like a collapse and more like the market just taking a much-needed deep breath after an overheated sprint. It's moving from an unsustainable pace to a more sustainable one.
Okay, that's a really crucial clarification. Not a crash, just a correction and a normalization phase. That makes sense. Are there any other external factors we should be aware of? Things impacting the market in Mammoth Lake specifically?
Well, one ongoing challenge that homeowners and, frankly, potential buyers need to be acutely aware of, especially in a region like the Eastern Sierra, is insurance.
Ah, wildfire risk. Right.
Exactly. Due to wildfire risk and just generally tightening coverage options from insurance providers, securing adequate and affordable property insurance continues to be tricky. The key advice here is really just to plan early. Start investigating insurance options way ahead of time. Stay proactive. It's definitely not something to leave until the last minute of a transaction.
Good advice. Okay, so let's bring it all together. What does this all mean for you, our listener? If you're thinking about buying, selling, or maybe just reassessing your property in Mammoth Lakes, how should you apply these insights?
Right. Well, if you're a buyer, this shift is generally good news for you. It really means more options and less competition than we've seen in quite some time. You're generally in a stronger negotiating position now. There's likely more room to negotiate, especially if you're looking at properties in those higher price points where inventory has really piled up, like those mid-range condos or the higher-end single-family homes. This is definitely not the frenzied multiple offer situation we saw back in, say, 2020 through 2023.
Okay, good news for buyers, potentially, and for sellers. It sounds like the days of just putting a sign in the yard and waiting for an instant bidding war are, well, largely over, at least for some parts of the market. What's their winning strategy now?
It's exactly right. For sellers, the report really stresses the critical importance of, number one, realistic pricing, and number two, potentially offering flexible terms to stand out in a market that simply has more listings. Overpricing your property right now will likely lead to it sitting longer, maybe even becoming stale in the eyes of buyers. It's really about understanding precisely where your specific property fits within those microclimates we discussed. Is it a hot luxury condo, or is it a mid-range unit facing a lot more competition? Pricing correctly for your specific segment is absolutely paramount.
Makes total sense. And for those folks who already own property in Mammoth Lakes, what's the takeaway for them? Should they be doing anything differently right now?
For current homeowners, the advice in the report is pretty clear. Now's a great time to reassess your plans. End quote. Whether that means considering a refinance, maybe try to lock in a potentially lower rate if one becomes available, or deciding to sell while prices are still relatively stable, or maybe just deciding to stay put and enjoy your property. Having this clear understanding of these granular market dynamics will really help inform whatever decision you make. Ultimately, the report really emphasizes that success in this market comes down to strategy, pricing, and knowing where your property fits in today's landscape. That general market label is just the beginning. The specifics are what truly matter now.
That's a fantastic summary, and it really brings us full circle, doesn't it? So, the core takeaway from this deep dive seems to be that the Mammoth Lakes real estate market in mid 2025 is incredibly dynamic, yes, but also highly segmented. It really requires a nuanced understanding, looking far beyond those broad buyer's market or seller's market labels we hear thrown around. Knowing the inventory levels, the demand within specific price points and property types, that seems absolutely key to navigating it successfully.
Indeed. Maybe a final thought for you, the listener, to consider. Given these very specific shifts we're seeing within different price points and property types right here in Mammoth Lakes, how might understanding these microclimates in one local market prepare you to better analyze or navigate real estate trends in other distinct, maybe geographically sensitive areas, or perhaps even in your own local market back home? The lessons learned here, I think, often extend beyond just Mammoth.
That's a great question to ponder as you look at real estate, really, wherever you are. Thank you so much for joining us on this deep dive into the evolving Mammoth Lakes real estate market. We really hope this has given you the essential insights you needed.